Thank you very much for joining me. My name is Roma Chingura and welcome to Pip Valley. I hope you're having a very good week. During these times, just want to encourage you to stay safe because the pandemic is real and people are dying. I just would recommend you to do the recommended things. Wash your hands, always wear your mask or your shield, and just be cautious of where you are because this second wave is more serious than the first wave. Okay, so today we are going to talk about a trading journal. I want to discuss the benefits of having a trading journal. Why exactly does a trading journal help you? Because as I indicated in the previous video, you know that usually people they neglect to use the trading journal because they don't really understand the benefits of it. So today I'm going to focus mainly on the benefits of it, right? So we have benefits of a trading journal. Then I'll also put in one or two dangers of not having one. But mainly I want to focus on the positives. Why should you have a trading journal? Because if you understand why you should have something, you see its value and then you start using it and you appreciate its use rather than just saying you just need a journal and without explaining the benefits of having a journal. And then in the end, I'm going to show you the structure of my journal, the one that I'm currently using. Without wasting much of our time, let's get into our topic of the day: Forex trading journal. Why should every trader have a journal? And why should you journal every trade that you take? Have you ever seen that there are so many things that happen to us, and some of them appear at random, but they are not random? I believe that everything that we have experienced, or that everything that we are experiencing, it has happened at a particular point in time. Even the pandemic, there was something of this sort early in the 20th century. It happened. So if you have records of things happening, you don't get shocked when things happen. You are not a victim of randomness, right? Because you'll be able to take advantage of randomness. So, as I'm explaining, as I'm saying, nothing is new. Everything has happened over and over and over again. And also, as traders, we know that there is no new setup, there is no new movement. Everything that's happening now, it has happened at a certain point in time. Yes, the way they happen might be different, but the principles underlying that it will be the same. All right. So let's get into this. Why should you have a trading journal? You have to track your performance. Professional athletes, for example, Usain Bolt, he tracks his performance, he tracks his time, like his 100-meter time, he tracks his 100, 200-meter time, each and every practice, I presume. Why? That helps him to have a goal to beat the time that he made previously. And in the process, he improves. So you are not going to improve your performance as a trader if you do not journal your trades. So the first advantage of a journal is tracking performance. And why is tracking performance crucial? Ask yourself, why do businesses do a profit and loss account and a balance sheet every year? Why do they trade? They have KPIs. Why do they have all the performance measurement that they do? It's because they want to be better. They want to work on their strengths, to maximize their strengths and minimize their weaknesses. So, tracking performance. And with tracking performance comes continuous improvement. Once you start improving, once you start tracking your performance, you will see areas which need improvement. You will see areas which need more work to be done. So the second is performance improvement. Fortunately, my first trade, I think I journaled it. It's because of my education. So I knew that you have to document your procedures. You have to document everything that you are doing. That forms the basis for your decision making. Thirdly, it helps with strategy development, as you'll be seeing what works and what doesn't work. Imagine you don't have a trail of what's happening to you, right? Or of how you're taking trades. Today, you enter after a bullish engulf. Today, you're not feeling sick. You are feeling sick, and then you enter into a trade. Tomorrow, you're doing a counter trend. The next day, you're doing whatever. You are trading randomly. If you are trading randomly and you are not tracking, you're not keeping track of your random trades, it means that you will continue to trade randomly and you will have no pattern and you will have no edge. So once you start tracking your performance, even if you start randomly, even if you start just picking anything that you want, like let's say your entry point, you just putting an entry pattern that you just wish that, okay, I'm just going to put this entry pattern. At the end, if you track those trades, let's say they are 20 or they are 50, if you track them, you are going to establish that there are certain trades that work and there are certain that do not work. So what you'll be doing now is, because you have that journal, you'll be seeing there will be trades or styles that work and conditions that do not work. So what you'll start doing is you'll start building upon those things that work. You will start building on your strengths. So it helps you to see what really works and what doesn't. It will guide you towards your edge. I remember when I started with just plain chart patterns, a bullish engulf, a morning star, pin bar. That was it. I also had a piercing moves. I used to trade that, but because I was journaling everything, I managed to trade that pattern didn't work for me, so I dropped it. I also managed to trade that inverted hammers didn't work for me. Inverted hammers and hanging men, they didn't work for me. So it was through journaling. You may ask yourself, how do you tell that, or how do you tell that particular pattern doesn't work? It's because you document the conditions in which you entered the trade, let's say what you are seeing on the chart, then your mental aspect, the risk to reward ratio, and all those things. You mention them. And then at the end of the day, or at the end of it all, if it's a week, if it's a month, you're going to check, okay, what was profitable, and then you record all those things. So after a period of time, you'll be able to tell that, okay, these particular patterns, I'm being successful at these particular patterns. It doesn't mean that it has to be 100% conversion rate. It can be 60%, that will be good enough. It can be 80%, that will be good enough. But then there will be some where it may be 1 out of 20 trades. So there is no need to keep such trades. As you'll be going also, you'll see that there will be particular conditions. Let's say in addition to the patterns, you're going to discover that there is a certain structure that's appearing always. So I realized that each time there's a triangle, the risk to reward ratio increases. So I started tracking the performance of triangles. Whenever I put in triangles, I would journal it. And then at the end of the day, I discovered that, okay, with triangles, I have a low probability of win rates, but with a higher risk to reward ratio. So it's now decision making time. What do I do? Should I leave it? Am I comfortable with the low accuracy and high risk to reward ratio? Then I made a decision. So that's how a journal helps you to build your edge. Then the most important thing is it guides you on trades to scale up. So what successful traders do is they have certain trades that they don't risk one. There are certain trades that they double up. So for example, if I take a risk of $10 a trade, If I see a particular pattern, I'm going to double my risk because I know that the conversion rate of that particular setup, I know that the probability is high. So even if I pull that trade and it's my stop loss, I don't care because I know that at the end of 10, 6 will be to my favor. And then on those 6, I'll have double the reward. So these are the benefits that I have for journaling. So just to give a summary of those, it's tracking performance, performance improvement, strategy development, and also guides you with trades to scale up, as well as leading you to the identification of your edge as a trader. Why is it so hard to journal? It's hard to journal mainly because people, they do not understand these benefits that I've just said. If you want continuous improvement, if you want to be the great trader, journal your trades and slowly build your edge. So I've given you the benefits of the journal. If you know some of the benefits, put in the comments section, because I believe that I did not exhaust. I didn't even give half, so we can run a discussion of more benefits of journaling. If you want also, let's include also the disadvantages of not journaling so that we keep the discussion going. So now what I'm going to do is I'm going to show you a sample of a journal. You will find that my journal, it doesn't include the psychology aspect of it. So the psychology aspect of it, I do a daily report card which states if I did not sleep well, I write that I didn't sleep well that day. If I had a weird dream, I'll write that dream stuff. So it's either you can combine everything in a trading journal, or you can have a daily report card on the side. So these two things, the trading journal and a daily report card, or a trading journal with a daily report card, they are so vital to your development as a trader. They are so vital to my development as a trader because the journey continues. There won't be a point where we will say that I'm now a master, I'm now a guru. We'll keep the development. Hence, my motto personally is continuous improvement. That's the word that describes everything that I do. I seek to improve continuously. Right. Now let me show you the sample of my trading journal. Okay, so this is a sample of my trading journal. So my trading journal is in Excel. You can use any form of software or even a notebook, use of a notebook, like writing down manually. That's fine because you have to do things that work for you and what's good for your personality. So what's best for me is using Excel and using the daily report card in my notebook. What are the components that are needed in a trading journal? So for me, the components that I have is, number one, I have the date. So I have to take note of the date. I also usually put also the day, like is it a Monday, Tuesday, Wednesday, Thursday, Friday? Because I've seen that there are certain days where I lose consistently on a certain day. Let's say on a Monday. I've seen that I lose on a Monday quite frequently. So when I trade Mondays, I lower my risk or I don't trade at all. Then I put the pair. The pair also, it also guides me as to which pairs am I good in. Recently, I cut down certain pairs. I no longer trade the Aussie Kiwi. I also no longer trade the Euro GBP. For some reason, they had the lowest percentage rate. Then I put in the time. So with the time, I found that there are specific times where the majority of my trades will be profitable. So I have fixed time. So at a certain time, in certain seasons, it's 12 noon and 4 p.m. So again, I discovered that anything outside those times, usually I would lose those trades. So now I just stick to those two time frames in a certain strategy. Then we go to type. Type is just long short. Then I go to size, the number of the lot, the size of the lot. Then I go to risk reward ratio. So with risk to reward ratio, I know that if I use 1.5 to 1, my win ratio will be higher than if I use 2 for 1 and if I use 3 for 1. So this one, I have a section, review notes. I'm going to put in like whether I should have extended my take profit, right, to get a larger RR. So this will also guide me, together with the notes that will be here. It will also guide me to the trades on which to increase my RR. So usually after maybe about 3 or 4 months, I'll start noticing that these particular trades, like the trades that I said I should increase my RR, will be the same. So I'll start increasing my RR the same. That's how also I figured out that with triangles, I increase my RR. Right. Then the next is the stop loss and the take profit. And then I put the amount at risk. On the reasons for opening the trade, that's where I'm putting my setup, the setup that's there, the structure. So if I get in here, then I'll mention the time frame. The chart is for time frame. So usually it's weekly, daily, and 4 hour. So these are the 3 time frames that I use. So the first chart that I look at is the weekly. So I'll document the weekly, maybe a bullish engulf in a pullback, right? That's the weekly. Then on the daily, maybe I have a morning star at the support zone. Maybe on the 4 hour, maybe I also had a bullish pin bar in a pullback. Then here, this section, I hyperlink the video of that trade for review. So usually I do reviews at the end of the day. Okay, so I usually show the opening balance at the top. And below here, I show the closing balance, I show the profit. So the profit, it would be the summation of everything on the profit section, right? Then I also go to the total number of trades. The total number of trades, I usually measure them by this section where I've put the risk. I also have the number of playbook trades. So I use different font colors. So if it's a playbook trade, I use blue. And if it's just a trade, but that's not in my playbook, I use black. So that has to be reasonable. But if it's not reasonable, I use red, and I call those junk trades. So I put the win ratio, the winners over the total trades. Then I have average amount at risk. Then I have average winning trades, the average profit for every trade, right? Then I have average losing, that's the average loss per trade. Then I have average size of winning trades. So that's the risk that I have put, right, in every winning trade. Then average size of a losing trade. What was the average size of each losing trade? Why do I do these things? It's because I want to make sure that when I win big, and when I lose lose small, maximizing on your returns and minimizing your losses. So you discover that it gives me an idea of the trades to increase the size or to reduce the size. Then the total amount risked, so it shows me the amount that was at risk at that moment, the value at risk at that particular time. So advantage of a journal is that it helps you with risk management. Then we go return per unit of risk. We're now looking at how is my performance in regards to each amount that I risk. This has been in percentage, return to paid in capital. That's return to the amount that I've put in. So paid in capital, it's, let's say if I have put in $1,000, it means that my paid in capital is the $1,000. So I'm looking at the return of the $1,000. A return per opening capital, that's the return of the actual equity that is left. Then number of junk trades, those are those trades that don't make sense. Let's say if I just enter the trades based on news, I don't trade news. Then the playbook trades win ratio, those are the setups and the structures that are in my playbook, in my trading plan. So at the end of it all those things, what they will do is they'll help me to track my playbook trades, the junk trades, the trades that are working and the trades that are not working. So this is a summary of my trading journal. This video is going to be long. So this is a summary. This is the summary of my trading journal. So at the end of it all, I have performance charts. So these are the performance charts which show my win ratios and stuff. And then playbook analysis. It's going to feed. So it feeds everything. So it doesn't. This is not good because I just took a section of my journal. So then now, after this, it leaves us to our daily report card. So what do you put in a daily report card? You just put in your mental state at that moment, or in that day, what the things that put you off during the day, or anything that psychologically affects you and the environment in which you were. You just put it in your daily report card. I also do a video of a daily report card. Guys, thank you very much. This was a long video, but it's beneficial and I felt compelled to do it. As I said before, I didn't exhaust everything. I also want to learn from you. What do you include in your journal? Let's put it in the comment section. Let's comment. Let's have a discussion of the things that we should add to the trading journal, things that you feel that I left out, the advantages of trading journals, such that when a person visits this video, especially if he doesn't journal, he's going to be helped tremendously. Thank you very much, guys, for your patience and for your time, the time you took to watch this video. I just hope that I've included certain things that you didn't know, and also some learning points. Also, don't forget to give the feedback of the things that you think we should add in our trading journal. Let's continue to trade carefully. Let's continue to grind the markets with greed. And also let's keep on managing your risk, because at the end of the day, this is all about risk. We are risk managers. The upside takes care of itself. Thank you very much, guys. Roy Machingura.